Hi, good afternoon, everyone. The theme for the panel here is ESG, which is environment, social, and governance. Is it an ordeal or an opportunity? Are we seeing private equity going that extra mile, canvassing hinterlands that were earlier underserved? Are there investments guaranteed to deliver returns that are in line with market standards? Do we see emergence of a new normal with funds that are backed by DFIs? If I were to just premise the issue at hand, the cost of funding United Nations Sustainable Development Goals, which are directed towards poverty alleviation, energy crisis, and regional conflicts, is $8 trillion, while the consolidated wealth of the Fortune 200 corporations is $21 trillion. At one end, we see deficit, and at one end, we see surplus. Do we see a conundrum here, and are we cracking the problem right? ESG investing is estimated to be over $20 trillion of asset under management. Are we seeing private equity funds go that extra mile into that space? We also see emerging evidence that non-compliances with respect to ESG is costing companies. Recently, we saw Pacific Gas and Electric filing for bankruptcy, and they have fines mounting about more than $30 billion US dollars. With that, do we see opportunities here or ordeals? We have a very eminent panel out here, which consists of the LP from DFID, Gaurav Kapoor. We have Akash Agarwal, Crystal Logistics School Chain, who's part of the investees of NEEV Fund. We have Manav Bansal here, who's the CIO of NEEV Fund. We have Dr. Martin Blake. Martin has been a strategic advisor to Blue Planet Environment Solutions, which is one of the foremost waste management and end-to-end platform in India. We also have Anurag Malampati, who is the CEO and founder of Leap India Food and Logistics. If I were to just start my panel by introducing our first panelist, Martin. Martin, you've been a strategic investor to Blue Planet Environment Solutions. And what is it that you would think about and you would actually direct Blue Planet in a direction to think when you think about double bottom line and while you're thinking about their business?
So one of the things when Blue Planet was conceived from the point of inception was that it would be predicated on delivering a sustainable business solution. So we quickly adopted the triple bottom line in terms of financial, environmental and social, and also we aspired to and aim to achieve net positive impact. So for us, we need to deliver in the financial dimension for our investors, and we also need to have positive impact environmentally and socially. So that's predicated, and our job now is to measure that and to openly and transparently report that as part of the governance process.
Great. Anurag, I would actually now come into you and ask you a very pertinent question about NEEV Fund is one of the first equity investors into Leap India Food and Logistics. How do you see this as an advantage? Do you see this as an ordeal, or do you see this as an opportunity? While you're conducting your business, you're present in low-income states such as Khagaria and Madhubani in Bihar and in Chansari in Assam. What is it that drives you to do business in these regions?
Sure. Thank you, Anjana. So, if you look at India, it's like Europe. Each state has a different functioning, different policy, different community, different politics. So each state functions separately and independent to the other. And while we understand that when we go into these states like Bihar, there would be not such modern infrastructure, but that is what leads to more amount of opportunities. And that is how we look at it while we go into these low-income states. And NEEV Fund has been a very early backer of Leap India. I think NEEV Fund has got us more exposure and aligned us with international standards on ESG. While we come from a promoting group which has been following ESG for the last 80 years, we've been interacting with multiple communities through our charitable trust. So I think partnering with NEEV Fund was a very great opportunity for us, and it has also helped us in our further equity fundraise, which we are doing now in partnering with like-minded DFIs who also give equal importance for financial returns and ESG. Thank you.
I would actually now come to you, Akash. Akash, you are the CEO of Bristol Logistics Cold Chain, which is one of the largest single facility of cold chain logistics in the country. You're present in West Bengal. You're also making a foray into Odisha. How has it been? What's the ease of doing business in these regions, and what's the comfort of doing business in these regions from your perspective?
Hi, thanks, Anjana, and good afternoon, everybody. See, West Bengal, we started off with West Bengal being one of the most difficult states to work in today are the eastern part of India, where you see the West Bengal, you see Jharkhand, you see Odisha. These are the states which have a pro-culture for not having business done equally well. So we started with the eastern part of India, where we built the largest single location cold chain. And once we partnered with NEEV, we've been able to grow drastically towards building the entire eastern belt, where we are focusing on the entire coastal belt of, we are moving into Bhubaneswar, which is in Odisha. We are moving into Jharkhand. We are coming up in Ranchi, where we are building another cold storage. So our entire focus was to see that when we started off building this cold chain, our thought was that to connect the farm and the produce, because as India is one of the largest producer of fruits and vegetables, we are one of the largest producers of marine. So these are the areas which you see the coastal belt of India can be connected to the entire developed countries. Even if you see that the model that we have created in terms of once NEEV has come into, we were following a good practice for having a lot of, so our primary focus was into the transportation. We did a lot of reefer transportation business, and we took a lot of care for the welfare of the drivers. Similarly, if you see today also, when we are having one of the best practices being brought in for the financial controls and taking care of the workers, we have developed over a period of the last 2 years, where we have brought in a lot of systems into the company, and that's it.
Thank you, Akash. Gaurav, it's important that I bring you in here at this point in time. When you conceptualized NEEV Fund in 2014, when the two Prime Ministers, David Cameron and Prime Minister Modi, resolved that they would work for infrastructure in India, and then in 2015 NEEV Fund was founded, there were certain set of conditions that you had, that you worked with. It was a small-sized fund. It was ESG centric. It also worked towards sustainable development. Has this proof of concept for DFID, or has this hypothesis has it been successful for you as DFID as an LP?
Sure. So I think that's a very good question. If we, like in the morning panel, we were discussing how almost a quarter of the professionally managed funds have dedicated to ESG or sustainability as an agenda. At that point in time, in India, in terms of the private equity, venture capital, early stage investing market, there was very little work that was happening. So it was quite an ordeal for us to think about it. But the opportunity or the hypothesis that we had was, do well-governed, small, medium infrastructure companies in challenging states like the low-income states in India, can they create impact and can they be commercially sustainable? And I think that was the hypothesis where we said, let's look at the underinvested sectors, let's look at the underinvested states, let's look at the market gap, and let's see, the hypothesis was that if you bring in the right capacity, if you bring in the right sort of procedures and processes, example, ESG standards, and you work with the right set of partners, i.e. the people on the right of me, can they make returns? And I think today, if you're all on the panel, that's the proof that that hypothesis has held quite well in that sense. Of course, we have some distance to go. We have some distance to go because, right now the tide is sort of against many of us, and we are in the market to change the tide where as many of us get involved on the ESG, which is about socially being responsible in terms of our investments, being conscious about the impact we're making to the environment, being conscious about the impact we're making to our workforce, looking at issues to do with women, safeguarding, all those issues which actually sustain. Can it make money? And I think that's something the panel will tell you later on, whether they've been successful in terms of finding money after us. It might be too soon. But the story of our opportunity is still to complete, I feel. But we've gone off on a very good start.
So Gaurav, quickly, if I can bring you back in before I go on to Manav. NEEV Fund is now in its 4th year. Are you happy to see this diverse set of infrastructure investments within the portfolio?
Yes, very happy. So I think what we are learning is that, we said our hypothesis was that we will invest in first-time sort of entrepreneurs because that's where we felt we could really take those companies from a standard which was the India standard to more international standard. And some of them, to their credit, came up with that consciousness of international standards early on. 4 years down, I think, we have enough proof and early signals to say that that is indeed, something that we're very proud of. And on the back of that, we are designing a whole range of portfolios, interventions, which will build on this as a base. And also from what I'm told by other departments and other practitioners in the industry, NEEV Fund has become quite a model for many of the others to emulate and follow, which itself speaks volumes, I think, to the work that colleagues on my right have done.
Manav, I have a question for you now. NEEV Fund is seen as a model in ethical investing. But my question to you is not on ESG and ethical investing. My question to you is about how do you safeguard the return on investment for your LPs, which is one of your primary goals or tasks as a fund manager. And secondly, how would you describe the deal flow and the conversion in the market that you work?
I think that's a fair question because what we do not want anybody to believe is that just because we are an ESG ethical invested focused fund, we do not make commercial returns. The concept that a social impact fund should compromise on commercial returns is not a hypothesis that we as a fund buy. I totally second what Gaurav said is that perhaps DFID saw an opportunity and they went against the tide. They said that we will not do what everybody else is doing. We will not give money to be invested in where everybody else is investing. We will create a hypothesis that you can actually make money in more challenging jurisdictions. And the fact that we have Martin, Anurag, Akash on the panel clearly suggests that there is an opportunity, and perhaps Anurag should mention that does he get superior returns, for example, when he invests in Bihar and West Bengal vis-a-vis Punjab? Perhaps Anurag should follow up on that. And if the answer to that question is yes, then all we really needed to do is find a great set of entrepreneurs who are willing to put their neck out, work with us, improve their governance standards, be socially conscious, be environmentally conscious, and rest really, it's their hard work, not ours. And obviously, Anjana, I think after Anurag, you should also speak about how challenging is it for you, for example, working with companies who are who work in more challenging jurisdictions versus what, for example, you would have done in Maharashtra and Gujarat. So I think, Anurag, you should perhaps take that one and say that do you find it more attractive to invest in Bihar than, say, in Punjab?
So, answering your questions in two parts, Manav, I will pick a bit on ESG also, because without ESG, there's no sustainability. And while it's important to make returns in business, it's also equally important to sustain it for a long term and to generate a very high positive impact. And when you look at investment opportunities, they generally are in places where that have not been explored yet. And locations like Bihar give us that opportunity to start the additional services over and above what we do than food storage. Then compared to a state like Punjab where things are more organized and there's very less investment opportunity that you can see there.
So if I can just quickly chip in with one comment that, it also makes good commercial sense because some of the challenges you heard in the morning about India was pricing in entry valuations, all of that. While there's a lot of commercial sensitivity, and I will not reveal all of it here, the fact that we are going into uncharted territories makes us work with entrepreneurs and with firms in an uncontested new marketplace in many ways. And there are a lot of advantages to that as well.
Okay. Gaurav, one of my final questions to you before we go in for a quick round of reflection with the panel is that what is the larger vision for the Fed over here? With Neve, you have tested this hypothesis. Are there new funds in the offing? Are there other sectors that you're looking at with this ESG lens?
So, yes. So I think the larger vision is actually something that we've built in with some of our early stage first phase of investments about 5 years ago. The larger part of our vision also includes working, with CDC, which I said in the morning is we are better known as CDC's parent in this sort of world. And with our own investments to try and make sure that ESG is quite central to the sectors and themes that we work on. So definitely there is a lot of funds that we could program, a lot of interventions we could program, where, commercial capital with some technical assistance can unlock those markets for ourselves and our investors, as well as for the wider market players in that sense. So that's, the making market approach is quite central to our vision and philosophy. And we have recently looked at startups, which was a sector we felt India was very good at. And the UK also had some good expertise. And could we, bring in the UK expertise to India in startups and look at tech, for example, in tech in edutech, for example, agri-tech, med-tech, health-tech, all of those areas where we felt there was a great impact in terms of service delivery and efficiency gain that was to be had. And of course, a lot of our vision is also, co-designed, and we are collaborating with Government of India very actively. So a lot of it has their inputs about where they see, joint effort for sectors to go on. But I would just summarize and say, I think one philosophy for us is, dare to be different. And I would sort of put it back to the audience as well to say, think different and, join us in that.
I think Gaurav, you made a very good point, and perhaps before Akash, I think Martin should speak about, how, because one of the things that we also focused on is that an urban sector, which is perhaps the most broken amongst all sectors that we've invested in, and Martin and his firm are trying to repair those markets, and they work with the most marginalized end people. And I think, Martin, you should also perhaps answer Anurag Gaurav's question about bringing technology from more advanced places to India, and how you're doing that.
Okay, that's quite a lot to talk about. So then you'll have to indulge me in time. So I think that commenting on a couple of things that have been mentioned, when Blue Planet was designing and constructing its organizational profile and its brand, we were actually very aware that there were investors who had lots of money to invest but couldn't find organizations where to place the money because their standards of ESG weren't adequate. So we were very clear that we would be market leaders in positioning ourselves as leading on sustainable development goals, voluntarily subscribing to UN Global Compact, and that we would deliver on the triple bottom line and measure that and report on it in an open and transparent way. Now, that in itself has been a very successful strategy, and there has been no shortage of inward investment in terms of us attracting funding. So that's on that side. On the other side, going into the less developed markets or areas is a great opportunity, because our strategy is based on fragmented markets and consolidating them and taking those opportunities and taking the synergies from that fragmented market and building it into a more coherent structure end to end. So overall, yes, it's been an extremely successful strategy so far. In terms of importing technology, whilst we're very cognizant that most technologies that are just brought from the outside and dumped into a location are doomed to failure, we tend to create indigenous operations and then optimize them using IP that we may bring in from elsewhere. So we're very happy to take an innovation from the UK or from other places in Europe perhaps and bring it to optimize an existing operation. Is that okay?
Sure. So integrating different solutions from various parts of the world, indigenizing solutions that are fitted for Indian or Asian conditions is something that you are looking at. In just final, a 20-second wrap-up from each of the panelists, is it, just if I can ask you, is it an ordeal or an opportunity? Gaurav, if you could.
Oh, definitely. I think it starts off as an ordeal because of the mindset that we bring in. But if we get over our own mindset, then the opportunity is limitless.
Thank you.
In fact, I think the subject of ordeal and opportunity, it's definitely what Gaurav is saying is correct. It starts with an ordeal and goes into opportunity. I remember when we started off the discussion for starting off in the low-income states, whether it's West Bengal and going down. And it's a very interesting fact. When we discussed with Neve in the beginning, we explained them that these are the pockets and these are the areas which are bound to grow from here. They are at the lowest, and I think that's the only place they can only come up. They cannot go any further down. And very interesting thing happened with us, just to share with you, is that when we started off in Calcutta, where we brought up our the first single largest cold chain, cold hub in the city, is we saw that there was a great opportunity which arose out of the marine business. So marine is a specialty for West Bengal, and they were hungry for state-of-art infrastructure. So when we started to construct, we didn't know that there was so much of opportunity in that state. When we completed the construction, when we approached the exporters, when we approached the fishermen, we could see that how we could link the fishermen and the exporter with the outside world by just creating a state-of-art logistics and cold chain hub. So that was a beautiful example, because every state which is the low income has their own potential to grow. So every state has their own speciality, and that's what we found in West Bengal. And we still see that there is great amount of opportunity, whether it's Bengal or whether you go to Odisha or other states. And that's what I think I wanted to convey here. It's an opportunity, definitely.
When you operate in these geographies, your risk perception that you're a company which is ethical and is doing the right thing, there is no corruption involved, there is a very transparent way of dealing with governments, that also plays a huge role in the way you conduct business.
So I think that was right on the forefront when we started off the business, and that the larger part of corruption and the larger part of bribery, which is very prevalent in these states. But we found that these states are not as bad as they have been projected to be. There is good amount of opportunity where people want you to build a good infrastructure and come up with good business opportunities. So there are pockets of that, but I think we've been able to evade that and come up with clean on that.
Thanks, Akash. Manav, your reflections on the return on investment vis-a-vis ESG and safeguarding that?
I think, Anjana, from our perspective, and you're pretty much part of it, it's a great opportunity. You see these companies and other companies, we as a fund are doing extremely well. I think our investors should be happy. I think also what we are equally, if not more proud of, is the impact that we're making through this money. on the ground. If there are investors in the audience and should they want to be investing in these geographies, I think it's a great place to work in because you move away from the clutter. You're not competing with every second private equity fund. You're going in territories where the returns are higher. And if you were to do it right with right set of fellows, with guidance from people like DFID who ensure that the guidelines are there, you can navigate the minefield of business challenges that typically these states could have, and were you to do it right, I think there's huge opportunity in these states and these jurisdictions as well. Thank you.
Martin?
Yeah. So I actually struggle to see the ordeal side of the equation. So for me, the global trend is very much moving towards sustainable business, because the antithesis or the opposite of that is to be unsustainable. So for me, the ordeal is going to be for the unsustainable business model when it has to try and catch up with those who have already left on that journey, and they've got to run to try and catch up with it. That's where the pain is going to be. But for us, because from inception, we were on that model, it's only unleashed opportunities which we've been agile enough to exploit.
So it's your business as usual case. Okay. Anurag, your final comments. Is it an ordeal or an opportunity?
I think it's an opportunity to invest, work, and interact with communities that need more modern infrastructure, while at the same time not compromising on our ESG principles and investor returns.
Thank you so much. Gaurav, I would have to bring you in now to make your final comments before, if we have some time for taking questions, but before that...
No, so just the final point I had to make was, whether the trajectory that India takes in 2030, India could be a 9 trillion economy or a 4 trillion or a 3 trillion economy. I think the answer lies right in the kind of comments that the panel has given about sustainability in that sense. So I think the future could be drastically different depending on the path we take.
Thank you so much, Gaurav. So quickly summarizing the reflections from our panel here, ESG is a way to do business, and it is a way to de-risk your business. 8 trillion economy of India that Gaurav just brought out, it can be a reality. The Neve hypothesis that was started in 2015 is being tested and is seeing the fruit of the day. We are seeing more LPs and more DFIs coming into this space, and we see more ESG investing. With that, I'd like to thank our panelists here.